Hello, sir.
So, uh, we are starting the session in next 2 minutes.
Excellent.
Just waiting for people. Actually, we have 187 registrations, so we were waiting the people will join. So I don't know why they are not joining.
Okay, no issue.
Just give me 2 minutes. We'll start then.
No problem. No problem. No problem.
Let's start the webinar. Let's start the webinar.
Please don't speak in between. Who is speaking? Can I start some good song for 2 minutes?
Okay, sir.
Can I start it?
In this video, I'm going to show you how to create this ebook and also this.
गुर गोरख बर्मा गुर पार्वती माई जे हो जाना आखा नाही कहना कथन न जाई गुर एक दे बुझाई सबना जिया का एक दाता सो मैं बिसर न जाई तीर्थ नावा जीत पावा विण पाणे की नाई करी जेती सिरठ उपाय वेखा विण कर्मा के मिले लई मत विच रतन जवाहर माणिक जे एक गुर की सिख सुनी गुरा एक देह बुझाई सबना जिया का एक दाता
Okay, I would request everybody to mute their mics now. I'm going to start the session. It's a humble request to everybody so that. Okay, thank you. Uh, a very good evening to everybody. First of all, let me apologize for the delay in the session. We were actually waiting for people to join. There were supposed to be at least 150 people for the session, but I don't know what happened because we have a registration of 187 people. So anyhow, people will keep on joining. We'll start the session. To give you a brief introduction about me, I am Kamaljeet and I am from Mohali, Chandigarh, and this session is about money. And money is something which is very, very important in everyone's life. So I hope everybody will listen to me and carefully. So for the first 35-40 minutes, we'll keep a monologue kind of thing where I would be speaking only. After that, you can ask as many questions as you want. So let's start. So in this we will be covering these topics. We'll have small introduction on financial planning. Then we'll talk about SEBI. Then we'll talk about how to buy and sell shares. Then we'll have a little bit introduction about mutual funds, and then we'll talk about how can you get your grievances solved from SEBI or other institutions. So let's start. So what is money basically? Money, all of you know that money is something which does not buy you happiness, but it buy you choices. So when money buy you choices, ultimately it is buying happiness for you. Okay. So if uh, if you don't use money properly, it can create a problem also for you because the money which you lose ultimately leads to bad choices made by you. So we will see in this session how to use your money prudently, wisely, so that a good life can be created out of it. So let's start with an introductory topic or difference between saving and investment. So all of you must need to know that there is a difference between saving and investment. Saving is the first step towards investment. If you want to do investment, you need to do savings. So the basic difference between saving and investment is that while doing investment, you take some kind of risk because if you're doing it if you're doing only investment, only saving, you are not taking any risk. But when you are doing investment, you are taking some risk. So saving can be done in a lot of ways. You can put your money into bed box, that is also saving. You can put your money into a into a saving bank account where you get 3.5 or 3% of interest rate. So all those things are part of saving, but most of the people miss understand it as investment. Putting your money into saving bank account is not investment. Investment is when you start taking some risk on your money and try to get more returns out of it. That is investment. So the first thing which you need to know in today's time, that today inflation, if it is 5%, so our focus should be that it should be more than our investment should bring us more than 5% or 6%, whatever inflation is. So what would happen if you start saving or doing investment? When you start saving or when you start investing, you help country to grow. You help people to or governments to uh, make more projects, bring more projects. You help them to uh, make sure that economy grows, and that brings us to this situation where people are well off. People become well off once they government start or companies start making money because they have invested in it, or because the better infrastructures are provided by the government. So that's how you help government also, or country also, when you start investing. Okay, so now the first thing which you need to know uh, as a part of this session, or the first fundamental or first takeaway which you can get from this particular session, is there are three types of needs you have: saving needs, you know protection needs, and the uh, investment needs. Kashish, you are recording the session?
Yes, sir. Session is being recorded on the cloud.
Okay, so you will be able to share same with me right after this?
Yes, sir. Yes, sir.
Okay,
Absolutely.
okay, thank you. So uh, what are saving needs? Your daily needs, which are your short-term goals, which you can fulfill from saving bank accounts, recurring deposits, post office savings, money market, liquid mutual funds, or short-term funds. The the basic thing which you need to know from this particular slide is that you have protection needs. Every one of you must get yourself insured. You must have, whenever you start your jobs, students who are in the session, whenever you start your jobs at the age of 25 or 26, make sure you get a term insurance done and a health insurance done for yourself, because that is very very important for anybody who is earning, who is making money, or who is the, at least you can say, or only breadwinner for this for his or her family. So make sure that uh, you take an insurance. If you have crossed 25, even if you are in between 30 to 40, make sure that still it is advisable to you to that you buy an insurance, a term insurance at least, right? So that is something which you need to take care of. Now, investment needs. What are investment needs? The long term, medium term, and long term needs are investment needs. For example, you want to buy a home, you want to buy a car, you want to send your children to better education institutions, you want to go to abroad for your trip. That kind of needs are long term needs that can be taken care of by bonds, debentures, shares, mutual funds, pension plans. So all these things will help you to fulfill your long-term needs. Now, this is one of the very important takeaways from this session. So over the ages, we have been practicing this, that saving is equal to income minus expenditure. That means uh, whenever money comes in forms of our salaries, what we do, we spend money out of that, and whatever is left, whatever is left, we consider it as a saving. Now the fundamentals have changed. We now say that rather than waiting for the money to be saved after doing expenses, let's take the whatever saving I want to do. We suggest that at least 10 to 15% of
Sir, voice is not clear.
we should make sure that at least 10 to 15% of our saving should be done on every month basis. For example, if somebody is earning 50,000 per month, he should take out at least 5,000 out
Sir,
of that.
voice is not clear.
It is very clear.
It is very clear, bache. It's clear to everybody. You try
Uh,
to see if your net is okay or
there could,
not.
yes, there could be some internet issue at your side.
Yeah, yeah.
Okay, sir.
So so what you need to do is, from your income, you take out savings, 10% savings every month out. For example, if you are earning 50,000, take out 5,000. How would it help you? It would help you by creating a regularity. First of all, you can create a regularity out of it, because if you are not regularly saving a particular amount, you will not be able to invest properly. So for example, if you follow the old rule that saving is equal to income minus expenditure, what would happen? One month you will save 2,000, another month 5,000, maybe another month zero. then there would be no discipline. There would be no discipline. So you need to make sure that there is a discipline uh, in your saving pattern. So regularity is very important. So make sure that you save uh, first, and then you start spending from whatever is left. Mink, you want to take a screenshot now?
Yes, sir.
Should I stop sharing? Should I stop sharing or not?
Yes, sir, if you can.
Yes, sir.
Yeah.
Just a minute. Sir, then you can continue. Thank you.
Okay. Thank you. Okay. So this is something which you need to remember, everybody. Make it a habit that you don't save what is left after spending. Save first, and then what is left after that, spend out of that amount. You will be benefited of this process. Then what are the steps in financial planning? You must identify your goals. You should have a goal in your mind always to do the financial planning. Then you identify your assets, then you identify your liabilities. Then you need to know what kind of future earnings I would have. Then you consider your future expenses and planning, and then you start putting your money into suitable products. That is how the things should be. And then make sure that you diversify. Diversify means don't put your all money into one kind of asset class. You should put your money into different asset class. It could be bonds, it could be mutual funds, it could be stocks, it could be CDs. So make sure that you don't put money into one asset class. It should be put into different asset classes, so that uh, there is less risk. So what three important consideration you need to do? These are the three important considerations for any product, any financial product. That is, returns and safety are interrelated. If you want high returns, you will have to buy a higher risky product. If you want moderate returns, your risk would be less. So depending upon the returns you want, you need to make sure that uh, your risk is according to that. And then you also need to consider that what kind of liquidity means. If I need money today, am I investing in such a instrument that if I need money today, it will give me my money back in time? If it's not, then
Audio, please. Audio.
then you should reconsider it. uh, am I audible now?
Yes, sir. You are audible loud and clear.
Okay.
Those who are
Yes, sir.
facing some audio issues, please check with your internet connection, as the audio is very clear.
Okay, sir.
Okay. So next is, you need to make sure that you need to know this thing, that there is no product where risk is low and and reward is high. That won't happen. Risk will remain. If you want to take higher returns, you need to take higher risk. So there is no product where risk is low and returns are high. So keep that in mind when you start investing. So this is a table which everybody should take a screenshot of. This is very important. This is basically telling you what should you you know do if you want to make, say, 10 lakh rupees in 5 years time, 10 years time, at 6%, 8%, how much money you should put in your account. So if you see here, if you want to create a corpus of 10 lakh rupees in 5 years time at 6%, you need to give 14,321 every month. Similarly, if you want to do it at 12%, it is 12,329. But if you see, if it is at the this thing is this level of if you want to do it in 25 years, you need to put only 587. So what is the lesson learned? The lesson is that you know that as the time goes by, you will need less money to make more money, first of all. And that is the biggest thing, biggest advantage. That is the biggest advantage of compounding. So for example, suppose I want to make 1 crore rupees from in 25 years. Suppose I start my job at 25 and I want to make 25, you know, in 25 years I want to make 1 crore rupees. So what can I do from this table? I can simply calculate that I need to put around 6,000 rupees every month to for 25 years, so that I could make out of 1 crore rupees out of it. So 25 years, 6,000 rupees means what? That you are only putting around 18 lakh 75,000, and from 18 lakh 75,000 you are converting it into 1 crore rupees. So that you need to know. Now what you can, how can you achieve it? How can you simplify this thing? You can do one thing. You can just start with 2,000 rupees per month SIP every month, and correlate it with your salary. Means every year when your salary increases, say to from 2,000, you can increase your SIP to by say 10%. By 10% your salary increases. So what would you do? You would increase your SIP by 10%. So next year, suppose this year you are doing 2,000, next year 2,200. By doing this every 7 year, you would double your money into SIP. That means by the time you retire at the age of 60, you would be putting around 64,000 rupees every month, and that is
So I
some.
have a doubt.
Yep. Please note it down.
So I have,
I will clear your all doubts at the end of the sessions. I will answer your all questions. Please note down your doubts. Don't worry. I will answer all the
okay,
queries and doubts at the end
thank
of
you,
the
sir.
session. Yeah. So so do this, and you will be able to make 4 crore to 5 crores of rupees at the age of 60 by doing this. Now you need to make sure that if you are investing on your own, because you are all well read and educated guys, you can do it on your own. Because if it is not your cup of tea, you would need a financial advisor. So you make sure that you get a financial advisor who is registered with a SEBI, who has a good track record, and who has good educational qualification. What are the things to remember? That investment is not gambling. You need to
Sir,
put
only
your
money.
you need to put your effort to make money. Okay, so what you need to do as when you start your jobs, you need to
Sir,
make
voice is
sure.
not clear.
uh, Kashish ji, hello.
Yes, sir.
So I don't know why it is happening.
No,
What is it?
no, it is
Let me correct.
it is very loud and clear.
If it is loud and clear and somebody is trying to make an then
I don't know. You can mute him.
yeah.
I am doing that. So what you can do is you can mute every participant in the meeting and do not allow anyone to unmute themselves until the query session begins.
So okay,
Again,
okay,
assigning
so
you.
how can we do that?
You can mute everyone.
So in the participant section, when you will click on participants, you will have the option of mute all,
Mute all.
and there you will find an option to allow or not allow the participants to unmute themselves. If you want,
Okay,
I can do that.
I have done that. Okay, so you need to make sure that you understand this concept, that first of all, investment is not gambling. Now first 10 years of your jobs, you must put all your efforts to make money, and make sure that you put that money into good asset classes. So when you put your money into good asset classes for the first 10 years, rest of your life you would not need to worry about your financial planning, because money will work for you then. So remember this: first 8 to 10 years, work for your money very hard, and then after that make sure that uh, you your money is working for you. That is something which you need to remember. Now let's talk about SEBI. What is SEBI? SEBI is basically a regulator who regulates securities market, as RBI is doing banking, IRDA is doing insurance. It was created under the Act of Parliament, and it works under the Ministry of Finance. Basically, it is doing these three things: it is protecting investor, it is regulating securities market, and it is developing securities market. And all of our three eyes, like we all of us are under one of these eyes. Either we are investors, or we are issuers, or we are intermediaries. So the SEBI makes sure that nobody is doing anything wrong in the market. Either investors are not doing anything wrong, they are not putting any money which is you know which is earned by wrong means, or they make sure that companies or intermediaries are not doing any fraud with any investor. So this is something which SEBI takes care of. And what are the securities market? What are the securities? Basically, anything which is related to stocks, is comes under the equity part. Anything which is related to bonds, it comes under the debt part. And a mixture of those, a mixture of both these particular securities comes under the others part. Uh, so what is basically securities market? You need to make sure that you don't look out for any mandi kind of thing when you go out and look out for securities market. There is no such thing. Securities market mean any place where a transaction is happening. For example, a mutual funds office, you can say a mutual funds office, any agent's office, any uh, any stockbroking's office. They are all part of securities market, and they are all under the purview of SEBI. So why should you invest in securities market? Because first of all, it gives you a chance to give your capital growth, and it gives you a chance to give you a return, and it also gives you diversified products where you can invest into different products, and it also gives you a chance to maximize your returns by giving you good products, and the products which gives you you know tax benefits. So this is the thing which is provided by securities market. And another slide, one of the slides which is very important for all of you to understand. Please understand one thing, that when you put your money into saving bank account, it does not give you appreciation all the time. Rather, on the opposite side, it gives you depreciation. So listen to me carefully now. Why do you put money into saving bank account? You put your money into saving bank account because you want it to grow, because you have deferred uh, buying something which was worth rupees 1 lakh today, and you thought that, okay, let me take some interest on it. After 1 year, I would go and buy this thing. Now after 1 year, suppose bank gives you 1 lakh, gives you 4% interest rate. After 1 year, you take 1 lakh 4,000 and you go into the market, and you go and see that the price of the thing which you sacrificed 1 year ago is already 1 lakh 8,000. That means you have already lost 4,000. And then 4,000 which you earned, on that you are giving interest rate of tax on interest. So that means you have lost almost 6,000 on your money, which and we don't calculate this thing 1,236 rupees and 8,000 rupees into our calculations, and we are happy that we are getting 1 lakh 4,000. But that is not the case. You need to understand that this is something very, very important and very serious matter in all our life. So the moral of the story is, don't let your money be into the bank accounts, sit idly. You just make sure that only some amount which is like required in uh, emergency, say 20, 25,000, 50,000, whatever your requirement is, keep that money in the saving bank account. Otherwise, all your money should be invested in higher interest rate, getting instruments, or returns getting instruments. So this is another learning which you can have from this particular session. So diversification, again, it will depend upon your financial goals. You want to double your money in 5 years time, you have to take more risky asset classes. You want to be safe, you want that your capital should be safe. You say that, okay, I would do the FD. So it all depends on your goals. And never put all your money into one thing. That is again and again I'm being repetitive, but it is very important that you diversify. So again, you should know about the tax benefits. Tax benefits means that it should not happen that you buy a product and there is a huge amount of tax on that, and there is then at the end you realize that, okay, there is no use of there is no use of that particular asset class because I am paying so much of taxes on that. So before investing, you should be knowing that what kind of taxes you are paying on that. So this particular slide is telling you that in when you compare 5 years FD or PPF or Sensex, you will find invariably that over 10, 15 or 20 years time, you are giving you are getting much more returns in case of Sensex or equity, because this Sensex is representing equity or stocks. So moral of the story is, if you want to make more money, you want to grow your corpus, the the mutual funds or the stocks are the answer, or investing into stocks through mutual fund is the answer. So remember that thing. Okay. So what is share? Share, all of you know that what is share? The participation in the company's, profit. Companies can issue you shares in two ways. You can buy a share from, secondary market, or you can buy a share from primary market. Primary market is when they issue IPO, initial public offer. You buy the shares directly from the company. What is secondary market? You buy the share from the existing shareholders through NSE or BSE terminals, where they are the intermediaries. So sometimes companies, they give you the dividends, the part of profit in form of dividend, and they make you participate in that, and sometimes they retain the earnings and they put money into expansion plans and new business plans, and mean doing that they increase the value of your shares and give you the desired benefits. So in India, there is T+2, rolling settlement. You have to understand this thing, that if you do the uh, you know a trade on Sunday, on Monday, your money will be settled on the Thursday. That is the T+2 after the uh, trading day. Means trading day is on Monday and 2 days must go by in between, and then the settlement happens. So that is how the settlement goes in our stock markets. So if you are want to start doing investments in the secondary market, you need to open a demat account and a trading account. For that, you have the basic requirements. For example, you need to get your KYC done through. You have to have a PAN, Aadhaar card, bank account, and photo, and then you fill up the application form. You give them the power of attorney, and your BSDA is opened. Basic service demat account is opened. If you are putting a value of less than 50,000 into these accounts, you are being charged of you're being charged nil. If you put more than 50,000 and it is less than 200,000, means 2 lakh rupees, you will be charged less than 100. So similarly, you have to open a trading account, because without a trading account you can't have a demat account for, because after you do a trading, the money, the stocks transfers to the demat account. So you need to have a both trading account and a demat account, and the requirements to open a trading account are also same. uh, what should you do, and what shouldn't you do after while filling the application form? You should not make you should make sure first of all that you don't leave anything vacant on the form, and you fill the nomination details. Very important, all of you please understand that whenever you buy any financial product or open a financial account, regarding to, it could be insurance account, it could be a mutual fund account, it could be any other account, you make sure that you don't uh, leave the nomination thing long. You have to fill nomination details, because that is very important. Why is it important? Because whenever somebody opens the account, uh, it uh, it becomes easier for the person who is left behind. When somebody say XYZ opened account and he's dead, so if he has nomination details filled in the application form, the guy who is left after, it becomes very easy for him or her to get the money back. So please make sure that you fill the nomination detail, and then single KYC. If you get the KYC for mutual fund done, it will be valid for your demat account and trading account also, and vice versa. So single KYC works in securities market. And you should always choose a SEBI registered intermediary. He should or she should have a good track record. There should be it should have a membership in stock exchanges, and it should have fast and accurate order execution, and it should have own depository services. The charges and commission he's or she is taking, it should be within the perimeters of SEBI. So what are the important points to remember? Very important 2 points. First of all, do not blindly follow market tips or rumors or media reports. And very importantly, do not invest with borrowed money. You need to have your own money to invest, even if it is 500 rupees per month, it's okay. But don't take money from somebody else and invest it. So that you need to remember. So what are the famous sayings? One or two my favorites are: if you want to buy stocks, buy it for 10 years. And if you don't want to keep stocks for 10 years, don't even buy it for 10 minutes. So that is something which you should follow. And one thing which is very important for everybody to understand, that market timing the market is practical and emotional impossibility. Means we can't time the market, we can't judge the market that now it is at the highest, and we can't say that now it is lowest. So if we could have done that, we would all be very rich, because we will sell at the point where it is highest and we'll buy at the point where it is lowest. So remember that. So let's talk about mutual funds now. Mutual funds means, suppose we are around 50 people in the meeting. We pool our money. Everybody contributes. Somebody 10,000, somebody 15 or 50 or 1 lakh, and we collect a corpus of 20 lakh rupees, and we give it to somebody uh, who is very good at understanding market, and invest on our part. And after that, he he buys schemes for us. And this is the structure of mutual fund. We have trustees, we have EMCs, and then we have schemes. Why should you invest in mutual fund? First of all, it is professionally managed, it is very transparent. Money is very liquid, means it is available within 3 days. If you are not investing into ELSS schemes, it is very convenient. You have good apps and all websites which will give you very convenient way of investing. And the ticket size is small. You can start from 500 rupees. It gives you the chance to diversify. A lot of different products with different objectives are available. It is well regulated by SEBI, and the cost is very low. Only rupees 2.5 at rupees 100 can be charged from you. So mutual funds do not only invest in stocks. You have debt, you have money market, you have funds of funds, you have index funds also. Uh, this thing which is a lot of people get confused on this. ULIPs are not mutual funds, please understand this. If some one of your family has bought ULIP in by having this perception that it is mutual fund, please ask him to stop it. ULIP is an insurance product, and it has very less chance of growing. You can see the charges from the charges part here. Here the maximum charge is 2.5%. Here in ULIP the charges are around 18%. So you need to make sure that it is uh, you don't invest into ULIP. If you want to invest in mutual funds, start with mutual funds. ULIPs are insurance products. Keep insurance and investments always separate. Buy a separate product for your insurance needs, and buy a separate product for your investment needs through mutual fund. So that is somehow that is something which you need to always remember. Then there are exchange traded funds. You can buy ETFs if you want to trade in mutual funds on daily basis, where they change the prices on the way shares changes. So you need to make sure that there is you have ETF for your this objective. Then you can buy gold through mutual funds. Gold ETFs are kind of mutual funds. This is very easy, and you can start with rupees 2,500 or whatever the minimum allowed gold ETF is according to the company, and it has a lot of advantages for you. Premium is very low. Impurity risk is nil. You don't need to pay VAT for that. So uh, in the end, we would say that please make sure that you don't go by rumors. When you start investing, listen to people, but when you listen to people, make sure that you read the literature. You must understand that rumors have no place in investing, so don't do that. And don't expect unrealistic returns. Why? Because once you expect unrealistic returns, there is a huge chance of fraud. Don't expect that your money will double in 1 year. It does not happen in real world. Please don't expect that kind of returns from investments. It is not so. Okay, so once you expect unrealistic returns, you get trapped in frauds where people will come to you and they will say that, okay, we'll double your money in 2 years time or 6 months time, or they will ask you to invest into different kind of schemes. So don't do that. Take the benefit of compound interest. It is the ninth wonder of the world, where money will grow if you give them time. If you give money time, it will double in 7 years time if you have invested in right kind of instrument. Okay, so if you have any grievance, you can go to the investor services cell of the stock exchanges. If it is not listened there, you can go to the SEBI's complaint redress mechanism, that is scores.gov.in, and then you can lodge a complaint on scores. uh, it is well designated site for only your complaints. And then in case you have any further information, you can go to local offices of Lucknow, Chandigarh of SEBI, or different these cities, and you can also go to the website. You can go to the investor website, investor.sebi.gov.in. Then you can call on these toll-free helpline numbers, and you can make sure that whatever queries you have, you get cleared. So this is from my side. Now the forum is, or the platform is open for everybody to ask the question. You can uh, you can ask the question. I'm unmuting your. Please unmute yourself, or you can ask the question in chat also.
Yes, sir.
Sir, I have a question, sir.
Yeah, please.
So in the beginning, you told,
Yeah,
so whatever you want to invest, there is a component of risk attached to it.
yeah.
But if I want to buy for myself, use anything, small house or small school for my children,
Mhm.
marriage, whatever it is. So what is your take on this?
No. See, when you buy a house to live in, that is not an investment. Please understand the difference between investment and investment. Means that whenever you buy, whenever you start investing, and whenever you say appreciate your money, the money should be available with you for any kind of thing. For example, you bought a house for yourself, suppose, and the house doubled in 5 years or 7 years time. Now you can't go out from that home and live somewhere else. If Because if the price of your house has increased, the price of other houses would have increased. So the investment means that you are putting the extra money. When you buy a house to live in, that is the needful buying.
That is fine. Thank you very much.
Yeah.
So I have a question, sir.
Yeah, please go ahead.
Sir, we are all aware of the fact that for higher returns, we have to bear higher risk.
Yeah.
So, sir, there is a thing called risk analysis. So, as a beginner, how can we analyze the amount of risk that is
See,
there?
risk analysis means, first of all, you have to do introspection. You need to get you need to you know reach a situation where you know that how much risk averse you are. So you can take a risk averseness test which is available online. They will make you answer to the questions, some questions, and after that they will give you a score which will tell you that what kind of risk averseness you have. Okay, so when I talk about risk analysis of a particular security, for example, when I say it all depends on what it depends on what kind of returns I want. For example, I want a 15% of return or CAGR, compounded annual growth rate, for my investment option. So if it is 15%, that means I need to take a risk accordingly. A higher risk, a higher kind of return needed, I would need to take into account that I would need to buy an instrument which is a high risk. So in mutual funds, but how can you see that? There is a riskometer on fact sheet and on key information memorandum of any mutual fund. If you go and check, it will tell you that what kind of risk this particular scheme is carrying. It will tell you that it is moderately risk, or it is highly risky, or it is low risk. So according to that, you can invest in that. But if you buy stocks on your own, if you do trading, that is very risky. Please understand, if you don't know the information, please make sure that when you start investing, you always have a longer horizon in your mind, 6 to 7 years, and you buy quality stocks. It will not give you any kind of losses. But if you do it for say 1 month or 2 months, or say 2 3 days or 4 days, it is always risky, because they always say that trading is such an instrument where 1 out of 50 million or 5 million, that guy earns money. So it is very risky situation.
So one more question, sir.
Yeah.
So what is your
Hello, sir.
what is your advice for people, those who have crossed 60-year age, senior citizens? So what should they do for
See,
investing and other risk-taking components?
yeah, for them, it is advisable, first of all, don't take much risk. Given the fact now we have to see their, because this is very subjective, we have to see what kind of sources they are having. Are they having any source except for their pension, or are they having any source where maybe it could be a case where people are, say, maybe a landlords, they are having some rental income. So it all depends what kind of shock absorbing capacity you have. If you are only a pensioner, then no risk at all. Just plain good post office schemes or liquid fund schemes where you would get a little better than FDRs, which are less risky. That's it. But if you have shock absorbing
Sir,
capacity, where you are have just 1 minute, let me complete that answer. If you have more, you have good income, another income except for your pension, then you can look out for mutual fund schemes uh, where things are less risky. You can go for large cap funds only.
How much return they give? Large this thing.
A large, see, again, the horizon is 6 to 7 years. If you follow that and if you keep patience, it must give you 10 to 15% of returns. But you need to choose the scheme accordingly. You need to make sure that you buy any scheme which is 7 to 8 years old, first of all, and then uh, you buy a scheme which is giving 10 to 15% of return since inception, means since this scheme has started. So these two criteria must be fulfilled, only then you buy that particular scheme. If you follow that, you will get 10 to 15% of return, but after 6 to 7 years of investment, not after 6 to 7 months.
Thank you.
Welcome. Yeah.
sir,
Next. Yeah.
sir, what are the factor? Sir, what are the factor to know the undervalued share? We have to study, sir.
To undervalue share, there are so many things you can do.
Yes, sir.
You can
वो कैसे
check
पता करे, sir?
you can check their book value from their balance sheet, or their from any site, their book value. If and then you can go, yeah, then you can see the kind of business.
Sir, sir,
Come again.
सर हम लोग टेक्निकल सर नॉन टेक्निकल सर टेक्निकल बंदे को तो सर ये बुक वैल्यू तो उतना देखने नहीं आता सर,
नहीं आता ना, तो
पढ़ने
अब
नहीं आता।
हाँ, तो इसमें क्या होता है कि जो अगर आपको अंडर वैल्यू शेयर देखना है, तो देखो, अगर आपको खुद थोड़ा सा इनका इंफॉर्मेशन तो करना ही पड़ेगा किसी भी हालात में, अगर आपको चेक करना है। तो अगर आपको कोई शेयर आज 100 रुपए का नजर आ रहा है, तो यू कैन चेक कि ये लाइफ टाइम हाई कहाँ पे गया है। ठीक है, अगर वो 100 रुपए का शेयर 200 रुपया जाके आया है, इसका
Yes,
मतलब
yes,
है
sir.
कि वो उसकी वैल्यू अब कम हुई हुई है, तो उसके रीजंस देखो। एवरीबॉडी इन दिस मीटिंग प्लीज अंडरस्टैंड वन थिंग, अगर आपको इन्वेस्टमेंट्स या ऐसा कुछ करना है, तो दिस सेशन इज आल्सो पार्ट ऑफ दैट। आपको इन चीजों के बारे में थोड़ा बहुत पढ़ना पड़ेगा। डोंट बी डिपेंडेंट अपॉन एनीबॉडी, बिकॉज जहां जो मार्केट में लोग बैठे हैं आपको गाइड करने वाले, प्लीज अंडरस्टैंड, वो आपके पैसे से पैसा बनाने की कोशिश करते हैं। all of them don't give you sincere suggestions. So my suggestion for you all would be that make sure that you read something about these things if you want to invest. तो अगर आपको भी
Sir, do we have any courses like swing training and etc. sir?
हाँ, you can
Does
you can you
this
can start you can
teaches
start you can start listening to good these business channels. You can start reading economic times. You can start uh, reading about these things. If you are not uh, if you don't understand the finance and economics, this thing does not come easily. It comes with time. It comes with experience. and and whosoever wants to take a lesson from somebody who is doing who is playing securities market or stock market for that matter, please make sure that you talk to somebody who has lost money, because he would tell you what not to do. That is more important than knowing what to do in stock market,
okay?
right? So
Okay.
you can learn,
Sir,
there are so
Okay.
many courses on stock markets in available on online also, and another platforms also. But make sure that you don't learn things for to make money in books only. You have to jump into it to learn practically, and only then you will learn, and it would take time.
Sir, how to learn series? Sir, how to learn this practically, sir?
By investing,
By
by
investing.
investing, by reading
Sir,
about
some
them,
courses are
by reading about them, by listening to
by
people.
some courses are available.
Hanji,
Okay, okay.
right? By reading about them, by listening to
Courses are
people.
available. Okay, sir. Okay.
Any other
Okay, sir. Thank you,
questions?
sir. Thank you.
Welcome.
sir,
Yeah. Hi, sir. Good evening.
Yeah. Good evening.
sir, now I'm in sir primary market.
Okay.
I'm thinking to enter in a secondary market. Sir, what are the
No.
things I
So
have to focus on
okay.
to reduce my
What do you
risks?
do? How do you define primary market? What do you do in primary market basically?
Sir,
If I ask.
just I'm just buying
IPOs.
just buying a IPO just now.
Okay. Okay. So if you are buying
Yes, sir.
IPOs, so
IPO, FPO.
okay, so you know the processes, right? So you see, you need to understand, uh, you need to
Yes,
identify
sir.
sectors, you need to understand the basics of economy. For example, what are the economic conditions in India which will help the which sectors to grow in 5, 7, 10 years. And then from economy you choose the sector, from sector you choose the industry you choose the stocks. The top bottom approach you have to take, right? Up, you need to see what kind of economy conditions for we have. For example, we can say that in next 5, 7 years government is making efforts to better the infrastructure, right? So better the defense
Yes,
systems
sir.
of India. So maybe the infrastructure and defense system, maybe due to pandemic the chemical sector is doing good because people are shifting from China. So these three sectors might do good in next 5, 7, 10 years. So from these sectors you need to take the leaders out. Who are the leaders? And then you can, or who are the companies who are doing well, if not leaders or mid cap stocks or small caps who are doing better, which would be very good companies in 7, 10 years time. You can choose those stocks and invest in them.
Sir, there are many applications in the sir market. Are they sir safe for investing or not?
See, applications, apps are a way of investing.
Trading app.
Trading, I won't
Yes, sir.
suggest trading to people like you. You must put some effort, put some time first, only then go for trading. First of all, if at all you want to do trading, when you open the stocks, when you open the demat account or trading account with any particular company, when you start it, you must first of all figure out that is it SEBI registered, SEBI has approved it. If SEBI has approved it, then most of the times it is safe. And you will come to know from SEBI's office. You can talk to somebody at SEBI's office. You will find the number on their website also. You can call them and you can take the name of the company that I'm doing it with this app. Is it safe? Is it registered with you? If they say that okay, it is registered with us, it's okay. Any other questions?
Sir, can you suggest any apps or websites to invest for the beginners?
Yeah, please. In this particular session, because this is being done for particular company, I can't take any company's name. I have a compliance on this. So we are planning a workshop on financial planning and management in few days time. In that, I would be able to take the names, but on this program, I won't be able to take any company's name or any product's name as such.
Yeah, okay, sir. Anyway, thank you.
Yeah, welcome.
So can I ask two more final questions, sir?
Yeah, please go ahead.
So my first question is rapid growth of stock an indication of a company being overvalued?
See, rapid growth
Sir,
in stocks.
taking example of Tesla.
Hmm.
2 days ago they were $555 billion and today they are $620 billion.
See, that is happening because the such share prices are increasing. Market capitalization means that current market price into the total number of shareholding. So if share prices are increasing, that means that their market capitalization is increasing. So if that particular stock is increasing, it means that they are doing good business wise. You're getting my point. Stocks only increase when there is a positive news regarding their business. On rumors, when stocks go up, they come down very easily.
So sir, is Tesla good in business or it is just a result of market news?
It's the result of.
Is it just a result of rumors that Tesla
No,
is
it could
growing
be,
so
it could
rapid?
be, it could be good business. It could be good business proposition. Their business might be doing good.
Right, sir,
So
right.
that is why you need to read about it.
So
Why the prices of this particular company increased?
one final question, sir.
Yeah,
Sir, if somebody is a beginner and is investing for the first time, what is the right platform for investing?
mutual funds.
Okay, sir. Thank you.
Go through mutual funds. Index funds will be the best funds, or liquid funds, just to have a knowledge about it, and then gradually move to another funds.
Okay, sir. Sir, is financial knowledge necessary for this?
Basics should be clear. Basics you should know, because otherwise you might burn your fingers. But with experience, you will learn.
Thank you, sir. Thank you very much.
Welcome.
I have a small, if you permit,
Yeah. Please go ahead.
to be on a lighter side.
Yeah.
So it is not a question to be on a lighter side.
Mm-hmm.
So a person buying a car or a person buying a bicycle, so, but he can afford both. So he prefers to buy bicycle.
Mm-hmm.
A cyclist, they say economists, so it is a disaster for the country economy.
Mm-hmm.
He doesn't buy the car, doesn't take car loan,
Mm-hmm.
doesn't buy car insurance, he doesn't buy fuel, he does not send his car for servicing and repair, and he doesn't use paid parking, and does not become obese also. So because a cyclist is a fit person, he doesn't need a doctor also. So this fellow who doesn't buy a car and put the money in the bank, So in fact, he is a disaster for economy. So
Yeah.
many areas they suffer because
Yeah,
of.
yeah. This
Yes,
is all interrelated.
yes,
This is all interrelated.
yes,
So this is part of the cycle, sir. Basically, what happens if it does not rain, there is no crop. If there is no crop, farmers will not have money to spend. If farmers will not have money to spend, there will be no economic activity.
yes,
This is all interlinked.
yes.
Yeah,
So they want more OBs, so more jobs for doctors.
more
More,
jobs for doctors. Even you know,
yes,
if there is no obesity, there will be less gyms.
yes, less gym.
Yeah,
True. And less pizza houses. No.
yeah.
Yes.
Any other questions? Anybody?
Sir,
Yeah.
sir, is it advisable to go for overseas indices or is it too risky?
To go overseas indexes.
Yeah, overseas indices.
I see. It again depends how good you are, how informed you are. It is, but if you see, if you check, you will if you compare their returns, you will come to know that India's indices are doing much better than other developed economies indices in terms of returns. Even though the America's indices have done good, but over a period of time, because they are already developed and they have not. So we are looking at a horizon of say 6-7 years. In Trump's regime, the indices of America have done well, but that might not be the case with every indices you follow. So you if you are investing say 100 rupees, you can invest 5% of 5 rupees in overseas indices also.
Sir, one more question, not related exactly this.
Mhm.
If you have some friend abroad, say in US, as you told,
Mhm.
can he send you some money, some dollars, if you have bought something for him?
If you have bought something for him,
I mean, he told you to do some expenses in India, and he wants to send you in lieu of that some dollars. So in your bank,
yeah, he can send.
so no tax problem or something.
Nothing.
So he can send you dollars.
Yeah. But
Because
it depends, he might it would depend upon like what kind of expense you have done. Like for example,
that
if either he's sending you $1 million or he's sending you $1,000,
no, supposing he send you $5,000,
so that is not a big amount.
so the income tax people won't ask anything.
No, because see, income tax people only ask about money about which of which you don't have a trail.
You don't have it.
Trail means that can't be trailed. That can't be figure out that where did it come from. When you have an idea, when you have a source of money which is very apparent that it was sent by my friend to me from abroad, and you have a transaction to show, it's okay, done.
Okay.
Yeah, you need to then justify why was it sent to you. So you should have some kind of if you have bought from him, you should have the bill or kind of things in case they ask. In case otherwise they won't ask. In case they ask, then you might say that I did this thing for him, or you can say also that it is a gift from him to me.
So gift they say, na, it is
Uh,
normally in blood relation. Gift is mostly in blood relation.
no, yeah, but in case of friends also, when it is coming from abroad, you can say that up to some extent. If it
Okay.
is not, yeah, if it is the money is not that big.
So why I'm asking this question is my first cousin. Sometime I buy some clothes for him and other thing for him, and in lieu of that he
No,
send me
these
two
these are
thousand
very
dollars.
these are very small things. They want these guys don't ask for these questions. They will ask you when the money is very big, like
Okay.
50,000 or say $1 lakh or say $2 million. That kind of money, 5,000, 6,000. They don't have time for all this. You
Okay.
know, there are
Thank
so many transactions happening on that scale.
you. Okay.
Okay, just a little important announcement in between. I have sent a feedback form link in the chat box, feedback come attendance form. Okay, so by filling that form, you can mark your attendance, from which we will get to know that you were present in this session. and we can proceed for certifications according to the attendance.
The session is excellent. Excellent.
Make sure to mark your attendance. Yes, sir. Please continue with the session.
Let us fill it. Right now we can fill it.
Yeah. Thank you everybody for
Very good.
participation. So I hope Mink, you have taken the required screenshots.
Yes, I have taken.
Can you send PPT of this?
Of this, see, this is because under compliance I won't be able to share. I told you that we are doing a special workshop on a 3-hour workshop on planning and investment in 7-10 days time. You will be informed about the same.
Okay.
Yeah.
Which are the sectors important this time
Come
for
again?
investment? From the investment point, which are the sectors
You
which
can
are
go
attractive?
for, you can go for chemicals, you can go for infrastructure, and up to some extent IT also.
Thank you.
Mink, you have taken these screenshots also. Should I stop sharing them?
Sir, you told about something about SEBI registered. You
Yeah.
told about some people are SEBI registered. What is it?
SEBI is Securities Exchange Board of India. The any financial transaction happening, you are doing any kind of transaction, maybe mutual fund or you buying something from stock brokers. You should make sure that whomsoever you are doing transaction with, it is he or she is SEBI registered, because SEBI is the guy who is controlling these people, scanning these people.
The company is
Yeah, the company is SEBI registered.
No, not the person. No?
Not the person.
Okay. Excellent session, sir. Excellent.
Thank you.
So, if we have invested and the shares price have gone down, so can we make it buy again for making average?
You can do
the shares are
average.
good, but there are circumstances.
Please understand one thing. Please understand one thing. When you invest, don't get panicked by movements of market. The up and downs are bound to happen, and they will happen. But you should wait at least 6 to 7 years or 8 years at least to make sure that your money is growing. After, say, you bought stocks today, and you after 5-6 months, or say after 5-6 days, market fell down and your stock came down. So don't panic. If you have chosen a stock on some fundamentals, you must stick to it. Yeah, you can average it. There is no harm doing in it, but there should be a limit to that also.
Yeah. Okay. That's
okay.
Good suggestion. Thank you.
Okay. Welcome. Should we wrap it up then?
Okay, sir. Thank you very much, Kavalji, sir.
Sir, one question, please.
Yeah, please.
So I want to just know that if I want to invest in the mutual funds, so from which side I will be able to know about this investment, to which I can invest more properly and get more benefit from at the end.
So you can know about these things from SEBI's site also. You can know about these things from NSE's site also, and then you can know about these things from different business channels and moneycontrol.com also.
Okay, sir. And sir, what are the plannings of the mutual fund? Which type of investment are there in the mutual funds?
Every type of investment. You can invest in property also. You can invest in gold also. You can invest in liquid funds also, bonds also, through mutual fund. Every kind of security, it would be available for investment through mutual funds.
ये थोड़ा सा इसका बताओ सर, ये गोल्ड बॉन्ड ये क्या चीज है?
ये गोल्ड ETFs है सर. These are gold ETFs, gold exchange traded funds.
ये कहाँ से मिलता है?
ये आपको स्टॉक यहीं से मिलेंगे. आप you can invest in gold ETF through your stock broker also, right? Through your mutual fund also. So the objective is that you don't buy gold directly for that, because for example you want to invest in gold, right?
Yes.
But investing in gold means that you need to spend at least 50,000 for 10 grams.
Okay.
And there is a risk of impurity. But I just want to invest in gold. So what should I do? I can start investing in gold by putting say 1,000 rupees or 2,000 rupees per month through gold ETFs.
That is better.
That is much better, because first of all there is no risk, or there is no bigger risk involved. Secondly, there is no risk of impurity. Right? When we as in financial advisors and financial analysts, we never ask people to invest in gold through ornamentation. That is not the way to do it.
Very good, very good, very good. तो इस पे कोई टैक्स वैक्स भी लगेगा?
No, VAT available नहीं, VAT applicable नहीं है. There is no wealth. There is a wealth tax. वो एक साल बाद लगता है, but वो that is very nominal. And कोई impurity risk नहीं है. It is directly related to international gold prices.
ये तो बहुत अच्छी चीज है. This is excellent.
Yeah.
And it is liquidity is also there. Liquidity.
Come again?
Liquidity.
Yeah, liquidity is always there. You can sell your units as whenever you want to.
Very good. That is great thing, no?
Yeah.
तो आपका नंबर वगैरह शेयर करो आप यहाँ.
Let me share my number.
Sir.
Email number.
Hello, sir. So in new mutual fund, is there a portfolio of investments is available?
Yeah.
And which
come again?
Mutual fund, in new mutual fund, in which companies they are going to invest? That
in
portfolio is available.
That portfolio is always available on that particular mutual fund scheme's website. This is rather mandatory from SEBI's side. They need to declare it.
Because they are going to invest, no? Because initially they may not have.
No, see, mutual funds, you are talking about new fund order, NFO.
Yeah.
Yeah, that is also their objectives, and their everything would be available to you when they release their prospectus.
Once people invest, they have all the portfolio.
See, they have designed it first. See, whenever mutual fund comes out with new fund order, they have already designed their portfolio.
Okay.
Because they have started a scheme based on some objective.
Okay.
Right?
Yes, sir.
Okay, so thank you very much, sir. So let's wrap up the session now. It's about 7.
Yeah, thank you.
Okay. So the session took a little longer.
Yeah. Thank you,
So
Mink. Thanks for the coordination, and I'll send you the participants. So Kashish, you would have the participants' names and everything.
Actually, we have the attendance that we have filled by the participants. So actually, I have told them to fill the attendance.
Okay.
So we can have that attendance, and we'll fetch out the names from there.
Right. Thank you.
Kashish is a great person, very good coordinator.
Thank you.
Very good moderator.
Thank you, sir.
Thank you.
Everybody loves him.
And Mink, you have taken the screenshot, so should we wrap it up now?
Yes, sir, sure.
Okay, thank you.
Thank you, sir.
Thank you.
And also, thanks a lot for Kavalji, sir, for conducting this session and spreading this knowledge to everyone present in the meeting or this session. Okay.
Thanks.
So I hope you're welcome, sir.
Thanks, Kashish.
I hope this knowledge will be useful for everyone in their financial life.
Yeah, we hope so. That is the objective of this particular session. Okay. Thank you. Thank you, everybody, for participating.
Okay, so I'm ending the session now.
Yeah.
Okay. Anything? Okay. Yes. Okay. If there is anything.
I have given you number, Komathi. Okay then.
Thank you.
Okay.
Okay, thanks a lot, everyone. And please do not forget to mark your attendance. Hope you all have marked your attendance. The link is in the chat box and will not be shared again in the emails. Please mark your attendance if you have not marked until now.
I have not marked, sir. Please help me.
Please mark your attendance. I'm sharing the link again. This is the link I've shared in the chat box. Only through the attendance, participants will get the certificates, because we got a lot of registrations for the event, but due to the timing issue, actually we had scheduled the session to 2:30 in the beginning. So due to some issue, we had to reschedule it, and that is why that time most of the participants were not able to join. Those participants are present in the session. Only certificates will be provided to only those participants. So are we good to end the session now? Taking the silence as yes. So I'm ending the session now for everyone. Within 1 or 2 days, we'll send the certificates. Okay, goodbye everyone. Very good evening.
Hello, sir. Sir, please share PPT, sir.
PPT,
Hello,
actually, as Kawaljeet sir has guided us, that PPT cannot be shared. Actually, they were from Securities and Exchange Board from India. So actually, according to their protocols, they cannot share the presentation with the participants.
Okay, sir, recording.
Yes.
Recording.
Session recording we
of
will
this
definitely
session.
share. Definitely, we will share the session recording with
Okay, sir.
everyone.
Please share in WhatsApp group, sir. Okay, sir. Okay. Okay,
WhatsApp
sir.
group actually we have not created. We will share everything in the emails. Okay. We'll
Okay,
try,
okay, sure. Sure, sure.
Okay.
Okay, okay.
Okay.
Thank you so much, sir. Thank you so much, sir, for wonderful sessions. Excellent session.
You're most welcome. Thanks goes to
Thank you.
Kawaljeet sir. Okay, goodbye everyone.